Guys, OPEC announced today that they're going to lower crude oil production by 2 million barrels a day. And the White House is very mad at OPEC because they believe that this will help Russia continue to fund their war. More importantly, this will put upward pressure on gasoline prices right before the U.S. elections in November. So, will this proposed 2 million barrel cut really take 2 million barrels off the market, or is it in effect really a lot less than that? And what will this really mean for gasoline prices? So, let's take a look. And so, in this article, Biden blasts short sighted OPEC's plus cut and blames U.S. energy firms for surging pump prices. And the White House press secretary says that OPEC's plus is aligning with Russia. So the Biden administration is furious, and President Biden said that he is concerned and called this cut unnecessary. And in this press release, they say the president is disappointed in the short-sighted decision by OPEC to cut production while global economy is dealing with the continued negative impact of Putin's invasion of Ukraine. And here they tout out this often quoted thing that since the beginning of summer, gas prices are down $1.20, and the most common price at gas stations today is $3.29 a gallon. But they don't tell you what the price was when he took office, when it was more like $2 a gallon. And to help artificially bring that price down, they are taking 1 million barrels a day out of the Strategic Petroleum Reserve. And they're saying they will deliver another 10 million barrels in the next month, just in time for the election, no doubt. So why is OPEC deciding to lower crude production by 2 million barrels if we're worried about oil prices and gas prices going up? Because if you look at a chart, here's Brent futures, but same with WTI futures, the crude oil price has reached levels that are now lower than before the Russian invasion of Ukraine, where they spiked to $140. You see Brent futures drop to almost $80 here. And so this is mostly because of demand destruction. When people are paying more for natural gas, electricity, and food, they have less money to put in their car and drive places, so they are driving less, destroying demand for oil. And that's why OPEC is acting now to reduce their production. And of course, it doesn't hurt that Biden has released about 200 million barrels of oil since March to lower prices. But now Goldman Sachs is saying that OPEC's 2 million barrel cut is not really 2 million barrels. And let's see what they're talking about here. So they're saying this cut is from baselines and there were no revision to the baselines, which means that to figure out the real impact of the gross cut, one needs to net out countries which are already producing well below their quotas. And one of them is Russia. They are underproducing by 1.3 million barrels per day versus its current quotas. So basically, the quota has been reduced down to where their capacity actually is of what they're producing. So because of that, Goldman believes that such a baseline adjustment is worth approximately 1.5 million barrels per day alone, even excluding Russia rebasement. And so this OPEC cut would really only be about a 500,000 barrel per day real cut. And Energy Intel's Amina Bakr says that the actual cut of a little under 1 million barrels per day. And the Saudi energy minister confirmed that the actual drop will be between 1 and 1.1 million barrels per day. So somewhere between 500,000 to about 1 million barrels per day will come off the market. So now before that cut, prices were actually trending up from a kind of bottom in September. And here you see WTI crude is $86. It bounced from about high 70s. Retail gasoline bounced up to about 381 from probably about 330 or 340, something like that. And wholesale gasoline is now $2.65, up from probably about 230 or so. So you have that OPEC cut, and you have the SPR releases that can't go on forever. As you see here, this is day supply left in the SPR, and About a year ago or so, we had about 47 days worth of oil in the SPR. Now we're down to about 23 days. And they still plan on releasing 1 million barrels per day, probably at least until the election is over. And so October 8th, 2021, we had 616 million barrels in the SPR. And now we're at about 416 million barrels, or about a 32% drop in about a year. So with the OPEC cut and the SPR releases can't go on forever, that's going to put upward pressure on oil prices. And now we have this bit of nonsense. EU ambassadors agree on a Russia oil price cap. So they have a new package of sanctions, including a price cap on crude oil, and they extend import bans on goods such as steel products, wood, pulp, paper, machinery, and appliances, chemicals, plastic, and cigarettes, because you don't want Russians catching cancer from cigarettes. So listen to this bit of insanity here. New package of sanctions on Russia, including banning maritime transportation for Russia oil to third-party countries unless the oil is sold below or at a certain price cap. Basically, they're saying any ships that are owned by EU countries and any insurance companies in the EU are not going to be allowed to transport Russian oil or insure these ships unless Russia agrees to sell their oil at the price that the EU says they should sell it, not only in Europe, but all over the world, like India or China. Of course, there is a carve out because the price caps contain measures to soften the impact of the sanctions on EU member states with large shipping industries and fleets, such as Greece, Cyprus, and Malta. Okay, so we're going to stop EU ships from shipping, except for the countries that have the biggest shipping fleets. Think of it like this. If the EU is a gas station and Russia is ExxonMobil, let's say, and the wholesale price of gas is $3, the EU is saying, hey, Russia, we will only buy your gas if it is priced at $2, way under the current market rate of $3. What do you think is going to happen? Well, for one, Russia will say, okay, you get none of my gas. That's it. And they go, okay, that's nice, but we're not going to allow you to sell it to other gas stations in India or China or anywhere else. And Russia says, how are you going to do that? And the EU says, we're going to do that by not letting the trucks transport your fuel. Now, that could work for maybe some EU shipping companies, but it's not going to work for other countries that are happy to have the fuel and have the ships and have the ship insurance that the EU is threatening to take away from ships that transport Russian oil if they don't stick to this price cap. So in the end, it's just a big scheme to put money in the pockets of countries like India and China and take money out of the pockets of EU citizens. How is that? Because if this happens, Russia will just happily sell this oil to India or China, who will promptly put it on a ship and bring it to the EU and sell it as Indian oil or Chinese oil at a nice markup. And if you don't believe me, this is already happening not only with crude oil, but also with Russian natural gas. So basically, everything the EU and US does to sanction Russia actually hurts their own citizens a lot more, it seems to me. So is crude oil and gasoline going to start rising again? That depends on what has a bigger effect, the demand destruction of a big recession coming or one that we are already in. Add to that, probably the SPR releases will be stopped after the election because they no longer need to do it to buy votes. And you also have the OPEC cut, which is in effect like 600,000 barrels per day, and the attempt at putting a price cap on Russian crude oil wherever they sell it anywhere in the world. This is going to backfire spectacularly. Thanks for watching, guys.